Hey traders, what's happening? Jamie Saettele here with Scandinavian Capital Markets and SB Trade Desk. Some of you I may have met in Vegas, actually. I think some of you might be in this webinar, so it's nice to put the faces to a name and get out in the open. I mean, this whole 2-year pandemic thing's been frankly, kind of annoying. Not to make light of it, but let's dive into charts. Hold on here. Share the screen. Okay. I think we're on the right one. All right. So we should be on the right one. We should be looking at DXY. And this chart, I know that many of you, if you've been in these webinars, I've been showing this chart for freaking 4 months now. The anatomy of a turn, if indeed this is a turn, it's arduous. It frustrates everybody. And again, this is the trend line back to 2011, right? So it was, again, 2011, 2014, and we, kind of traded around it and really tanked back in November 2020 off of it into the final lows back in January of 2021, and we've just been riding this thing since November. Okay, so November, when we hit the top back in January, I really thought that was a bigger top, especially with the decline that we had, appearing impulsive and the like. Not to be, because we are back at new highs. And just a couple things to, pay attention to here, now, of course, right? That's also the 618 retrace of the decline from March 2020. But if we do get another spike higher, and again, I'm not pretending to know that this is a top. I'm just saying, like, be prepared, be aware. Markets are at extremes, to say the least, and the dollar is really not necessarily one of them. I'm talking, crude and all that stuff, but it's very loud, right? The news, everything's very loud and emotional. Sentiment's getting extreme. I think I saw somewhere, I don't have these numbers every day, but I was talking to some fellow trader, and I think Euro DSI is sub 10 now. So that typically those single-digit numbers are oftentimes pretty good indications that you're close, right, to maybe going the other way. So if we do spike higher, pay attention to DXY here at 98.50s or so. Again, that's going to be kind of this upper wedge line, if you want to call it that. And then the parallel that extends off the low from 2018, which was resistance back here in 2020. And it's also the May 2020 low. All right. So makes sense to move on to Euro. And I'm going to show you on here. Let's go to a weekly chart. Okay, so this is a log chart. I get this question a lot. Should I look at log or arithmetic? Frankly, I guess look at both. For very long-term charts, in things that have huge moves like Bitcoin or, Ethereum or any of those cryptos, or, long-term equity charts or something, you do need to look at log, I think. But in the case of currencies, which, the moves are quite muted, even over really long-term timescales, they're still not anywhere near, say crypto or, big equities or something like that. So look at both. So this is, and they're not going to be all that different, but this is a trend line on log scale from 2000, right? So 2000 connect to 2017. You can see what happened back here when we bottomed in 2020, and we're back at it now. And now this is arithmetic scale. So arithmetic scale might actually be a bit cleaner in this case. Just kind of zoom in here. Let's go to a daily chart. See the line. So back in 2020, we, tanked, right? Speaking of loud markets, this certainly qualifies, as does this. And that actually brings me to something I want to bring up really quick. Quick chart here. Hold on. So, where is it? Why don't I have it? Did I not save it? I guess I didn't save it. Hold on, I'll find it. But it's a chart of euro volatility, which, and bear with me, hold on. I found it, hold on. Okay, so here's a chart of euro 1 month vol, and this was back in March 2020, right? So this is now. This is from like 2 days ago, so I'm not sure where we are now, but these big moves higher, indicative of a objective measure of a very loud market. So again, just kind of wanted to point that out. It's not just me making this stuff up. So anyway, euro, pay attention to, and who knows, maybe we hit it in this webinar, like 110.20. That's the arithmetic scale from that 2000 to 2017 and 2020 trend line. Okay, so that's a big level. And again, like I'm not saying put the orders to buy every euro down here by any means. What I'm saying is pay attention, be aware of it. If you start to get signals like reversal days, huge volume spikes, things like that, then maybe there's a trade there. But at this point, it's just kind of preparing for something that may happen. Let's move on to dollar, Swedish krona. I always like to look at dollar SEK when I am looking at euro and DXY. This is viewed in log scale, and if I scroll out, you can see here beautiful trend line 2014, 2018, resistance back in 2020, and we're getting really close to it now, right? So again, kind of lines up and jives with what we were looking at in terms of both DXY and euro. So pay attention to that. Let's go to crazy crude oil chart. What do you say? All right, so this on log scale is annoying because of that negative print. I actually posted this last night on Twitter. Some of you may have seen it, but again, a huge level here for crude oil. So 2001, 2009, former support, becoming resistance here. And we just nailed it. Oh, and by the way, we tagged the 2011 high. And crude's actually trading off. If I zoom into an hourly chart, you can see that. So last night we traded almost 117, and we traded down this morning to 106. These are silly moves, just stupid, right? So am I saying this is a top? Maybe. There are ways to try to play this, but obviously be super careful. Probably options is the better way to go, but I'm not here to really discuss options strategy. I want to point out this is a huge level, and would not be surprised if we reverse hard lower. All right, let's go to dollar yen. This has been very confusing to me. Dollar yen really hasn't done a whole lot of anything. Which is odd considering the moves in bonds, the moves in gold. Historically, those tend to move together, bonds, gold, and yen. That has not been the case. But again, we are still trading, and we have been since November, just like DXY. We've been trading at that 618 retrace of the decline from 2015 to 2016, right? So do we resolve lower here? Not sure. I will tell you that my trigger for this is essentially this line right here. which you can see is kind of a ugly looking possible head and shoulders. May or may not be, who knows. All right, let's move into some shorter term stuff, actionable here. So Aussie's been a good trade of late, and there's a couple tools here to point out. One, here's the pitchfork, right? We finally broke above the center line, which was formerly resistance. So I would actually watch for that to provide support. And again, the way things are moving, maybe that's in the next 30 minutes. But yeah, that's like 72.70 or so, which is interesting because 72.65 is also the opening price, excuse me, for the year. It's also the opening price for this month. So pay attention to that. Need to hold there in order to continue to the short-term targets of like 73.70 and then 74.30s. Kiwi. Again, in recent weeks we've talked up Aussie and Kiwi based on some pretty simple stuff, notably just huge levels for Aussie. Again, Aussie tagged that 69 level, which was the November 2020 election low. For Kiwi, recall that we had those two legs down, right? ABCX, ABC. We have indeed turned up. And the way I would trade this, right? For one, we pointed out support back here on the 24th last Thursday, which was a very clean trend line, right? It's also 2022 VWAP. Still not used to saying 2022, by the way. And I would still call this support. Again, 67 is the big level here. Probably don't want to fool around with it until either 67 or you break above this. And again, that's the setup I call the slingshot, right? It looks something like this. Oops. You would break out and then come back, and that would provide support because it was formerly resistance anyway, right? And again, the 68.60 is a very, very big level. Just looking back, right? Neckline of sorts, which was support and then resistance, and it's also this low here from September of 2021. So it is a big spot. By the way, if there are any questions during this webinar, please do not hesitate to ask. Dollar CAD, which is ripping right now. This is an interesting one and a good little educational piece on triangles. So I actually have us at near-term resistance right here, 26.80. All right, so if this, here's one possibility, right, for an Elliott wave. So if this is a big wave A, right, then this whole thing from August is a B wave, right? A B wave triangle goes like this, A, B, C, D, E. You can get a good clue, if you will, that you are indeed in a triangle by looking at the alternate legs and see if they relate. So I'll give you an example. So A and C and B and D. So if we take alternate legs here, right? This leg times 618 is the exact high, okay? So we can try to guess or get a level by doing the same thing. And we actually get 25.60, which lines up with this level. So earlier this morning, I was actually hoping that we'd get down there. That would be an opportunity to buy into this, which is not just the fib, it's also a trend line. And oh, by the way, there's the 200-day average there too. So there's a lot going on at 25.60 or so. So be aware of that level for possible big time support. Obviously, if you break through the trend line that goes back to June of last year, then triangle's kind of no longer, right? All right, let's move on to metals. So gold has broken out, right? Pretty simple chart here. We had a big breakout, but we did indeed get a very big high volume reversal. I guess that was last Thursday on the 24th, and we've run into a big horizontal level here. So, not real keen on kind of, buying into this, near term, longer term positions. Again, that's not for me to decide. Everyone's different. But we could certainly come back and test the breakout level, this line, right? So very clean trend line, crosses highs, 1, 2, 3, 4 touch points. A drop back here would not be all that surprising, given kind of the sentiment that is surrounding this. You might even get, something where you get some big sideways action. Check out the 50-day average. It's right here as well. There you go. Nice horizontal level as well. So it's like 1830s, and that's a big drop. But in huge up moves in gold, you can have substantial kind of washouts, make people give up a little bit before the next leg. Silver, I actually had written the other day that silver broke out, and I kind of jumped the gun on that. I get excited too sometimes. So this is the channel. Okay, it's clear as day. And what we're going to watch for here is actually, so again, the concept of former resistance providing support and vice versa, it applies not just to horizontal levels, but also trend lines. And in this case, you can see the parallel within this, this channel, right? Look at the touch points here. Boom, 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 boom. So again, with gold into a big level, silver also into a big level, right? This is the November high. A pullback here, all the way back down to this 24 level would not be that crazy. Again, you kind of have to be creative in thinking about what could happen in these very, emotional markets. Here's another little trick, by the way. So when you have a very well-defined channel that has touch points on both ends, like we do here and like we do here, and we've reacted to it, if indeed you do break out, you can target the full width of the channel, right? So take the width here, extend it this way. That gives you an objective. And oh, by the way, it intersects with the high from last year up near 30 bucks. All right, let's move on to some equities. For one, we did hit massive support. This is Nasdaq Futures, and this is a trend line back to 2014. Right, you can see all the little highs at 2014 high and March 2018 high. That was resistance here, 2020. It's also very clear support throughout 2020. And it was just support last week. So again, the Nasdaq's the cleanest one of the bunch here. As far as an Elliott pattern would be, concerned, you've got a 5-wave move down. At 1, 2, 3, 4, 5. Throw a fib on there. 618 is going to line up with this former 4th wave high. It's beautiful. It's perfect. It's also the underside of this channel here. So again, 15,260 or so would be my best guess for resistance if we get there, right? And you may have heard some people talking about this, but the Dow, well, and the S&P for that matter, I just did it on the Dow because I've got cleaner long-term levels to compare it with. But what you've got here is this is the 2018 decline, and so far it's pretty similar. I just have a little analog up here. Just copied that on TradingView, drag it over, and you can see matches up pretty well. The sequence, the time series are very, very similar. So again, if this were to continue, we would have a move probably up towards this upper parallel from this fork, which is going to be, let's call it 35.3 or so. So that's really what I would pay attention to. And I think we, look, my opinion is that we need to get up there and get a little more strength. The market is pretty fearful, like, sentiment's awfully dour. And if this is a bigger top, that sounds weird saying we've already, dropped a lot, but if this is a significant top, a really big top, then we probably need to reset sentiment a little bit, right? Okay, let's take a look at something a little wild. I want to show you Euro Aussie. So just notice that we had a straight line drop, right? Okay, so we need to see where we close today to do a real study on this, because RSI only knows closes, but daily RSI is below 20. It's at 19.3 right now. Okay, let's just say for the sake of this webinar, an argument that we do close beneath 20. You can see the little magenta dots here. That's now. Last time it happened was back here in 2018, May 2018. Pretty darn close to a big low. Prior to that, you got to go all the way back to the massive low that we had in 2012, right? Before that, 2005. My point being is that we have, a rare technical reading here with regards to momentum. And look, I'm not saying that it can't get more extreme. It certainly can. You can even see, some of these other instances, like, 2012, you continued lower for quite a while, right, before you bottomed out. My point is that it's extreme, kind of jives with the idea of the long-term euro-dollar trend line anyway. And I would just be aware of that. So just an observation. Okay. So that is pretty much all I've got. Actually, sorry, one more thing I wanted to show. Sorry, this webinar is a little shorter today than usual because I've got some other calls that I need to get on. But don't forget this one. This is the other dollar index, right? US DOLLAR, which is just the index of euro, pound, yen, and Aussie. And if anything, waiting for this trend line to break has kept us from being, on the wrong side of these moves the last week or so. And it's, 1, 2, 3, 4, 5 touch points. So we are really stuck between a rock and a hard place here. But again, nothing's changed. You need to break this level before it's kind of all clear, if you will, on the downside for the dollar. Until then, it's like holding a beach ball underwater or something. It's very, very difficult to try to fight this move, and don't fight it until this breaks, in my opinion. Alrighty. So that is it for me. Hold on for a second. I'm back. All right. So again, I've brought this up the last few webinars, but want to bring it up again. Scandinavian capital markets. Oh, I have a question here on Ethereum, and I will get to that after this brief announcement. So Scandinavian capital markets, we've revamped our funded trader program, right? If you want to become a prop trader, this is your chance to do it. So go to scandinavianmarkets.com/getfunded, and you can read more about it. But we can fund with up to $2 million. Again, the amount is up to you. There is an assessment. You need to pass it before you get funded with real money, of course. And yeah, you'll read more about it again at Scandinavian Markets /getfunded. All right, so we had Ethereum question. So let me go to that. Oops, hold on. Gotta get my screen back up here. All right, here we go. Okay, so Ethereum. Question was, do I still think it's going to 1,000? I mean, I have no reason to change that call, if you will. That was my call at the end of the year, or the beginning of this year, end of 2021. So actually, we're at pretty good resistance right now. So the reason for this call, if you will, that's what you want to refer to it as, was back to December 2018 low. We have a big 1, 2, a clear 3. Again, this is Elliott. I think everything from here, again, that's back to May of last year, is what we call a big fourth wave, right? Specifically, probably a flat correction. So this is A, B, right? Take out the high, get everyone excited. And now we're in for a big C wave down. And the parallel supports for this would be around $1,000. And if we zoom in, can actually see this is VWAP from this high back in, again, the May high of 2021. It's a big level, right? There's resistance, takeoff, support, support, crash. Nothing happened here. It was resistance the last 2 days. So it could, frankly, it could happen from here. Again, that's not, I'm not really into the prediction business. However, the wave count makes sense, and we are into resistance. So to me, this is a bearish chart. Okay, alrighty. So that is it for today. Again, pay attention to Euro near 110 if we get there. We just traded down to 110. What we just trade? 110.38. So getting close. Question here, issue is crypto not following NDX with lower 5 times. Oh, so so one thing, be careful with correlations. Look, they always change, and I get it. Like, I get caught up in this too. But you can get a lot of trouble with correlations and what I call backdooring a trade idea or something. Like, for example, look at this Russian situation, right? Russia typically moves, and again, it's an extreme example, but Russia typically moves with oil. So if you would have been bullish oil and been like, oh, I'm going to buy RSX or something, so it, it looks cheap. Well, it's getting a lot cheaper every day. Same could be said with like yen and gold, right? If you're looking at gold and analyzing gold, trade gold, not yen. So I understand what you're saying, but the correlations and relationships are constantly changing. All righty. All right, so thank you all very much for your time. Again, Jamie Saettele here with Scandinavian Capital Markets and SB Trade Desk signing off. And good luck. Be careful out there in these wild, volatile, emotional markets. And we'll talk to you next week. All right.